On today's episode, we talk about options. So hey guys, WC Hamilton here, and I am back finally after a few weeks hiatus. I've been very busy with work, as you can imagine. You notice there's no light behind me. That's because we've been using it for South by Southwest events and so on and so forth. So yeah, it's in a case somewhere and I haven't bothered to put it back up yet. But it is a new day, a new week, and I've got some stuff to show you. So let's jump right into it. All right, so as you can tell, it is before market hours, or after, but it's before, just letting you know. That's why the back of the Robinhood website is black, because it's outside of market hours. Once it hits 8 o'clock here Central, that'll change to white background automatically. So it may happen during the video recording, I don't know. I'm hoping to do this really quickly, because I actually have an event that I'm leaving out of town for the next 5 days. But anyway, so I wanted to pull up this graph about all time to show you kind of what the trend has been and where I'm at currently and then basically go over how I got to where I am right now. So we started out, we put in $1,000, so it's moved up a little bit. It has some dips in here, but mostly going up. There's a few times when it, kind of, but then it started trending sideways for most of February, and then, oh no, what happened here? And then now it's kind of gone back up. Well, I'm not going to name any names, but basically, some things were said on the internet and whatever, and now there's bad times for these stocks right here. And it really kind of, this one especially, if we look at it, I have an average cost of $7.53. Let's go back a month. Like, you don't even see $7.53 on the chart. But I bought it somewhere in here, and then it just tanked. Granted, I only have 15 shares of it, but still, it's kind of annoying that that's like, oh, because look, if we look at it, the 3-month, you see it's, it's at $5.15, because I've been going in and out of it around $4 to $5. I was somewhere in this when I cashed it out, but it started to trend upwards. It was like up here, then it settled, then it goes up again, then it settled, then it goes up again. I was like, okay, we're settled now. I'm gonna get a couple, and then just like the next day, I think I bought this on, let's see, on the 27th. Yeah, the 27th. I bought it. Look, I bought 10 on the 27th at 761, and it started to drop a little bit. So I bought a few more because I was like, oh, I'll average it down a little bit. And then the next day, it just plummets down here, and then we're going to, a week out. It's at 454. So that kind of hurt a little bit. That was $45 gone. And then Tesla, obviously. So I bought it right before the hype of the Model Y. I thought, oh, for sure they're gonna, people are gonna eat this up or whatever. Or actually, it was right before they announced the price drops or something. And I was like, oh, they're gonna eat this up. So I got in on that again because I was thinking, oh, it's gonna go back up, and it did not. It's been on the steady decline since. So I just have 2 of those. Only have 2 of those, but if we look at our history, or account, I should say, that accounts for almost 50% of our total portfolio, which is not great. Ideally, you say you want to try to keep any given investment to about 10% or less of your portfolio. I have not been paying attention to that, and now we're in this situation where I'm negative $71. So, like if these had just stayed at no profit, I would have been almost over $1,300 in the account. Obviously, if you do math, like almost $1,350. So it is what it is. All right. So I did talk about how did I get to this trending upwards. Well, that is through options trading. That's right. I've been doing options trading. I started doing that a little while ago. When you first sign up for a Robinhood account, let's go to our settings. We go to options trading. When you first sign up for Robinhood, all this stuff is unchecked, meaning you can't make options sales. Once you have enough money in your account, I believe is the case, then you can try doing options trading. I didn't have an issue signing up for it because I guess I'd met all the criteria by the time that I had attempted to do it, but I feel like if I had just opened it up and tried to jump into options, it wouldn't have let me. But what I wasn't able to do was this, buying and selling spreads. And you have to upgrade your account to level 3 to be able to enable spreads like call spreads, iron condors, those kinds of things. And I really wanted to try that out because I figured, it's like I can't sell any options because I don't have 100 shares of anything other than Weatherford, which isn't, 50 cents. Because otherwise I don't have enough money in my account to cover 100 shares of even like Ford or something. So the only way I could be able to sell stuff, which would be getting a credit on it, would be if I was able to sell spreads. So I had to buy a whole bunch of options, and I traded Ford options for a while. So we go back here, Ford, because Ford's kind of been on a upsy downsy kind of weird sideways thing. So it kind of goes in swings, so down and up, down and up, down is probably going to go back up again, so on and so forth. And if we look at our history, we can see that I have all of these buy and sell orders going back. I mean, this is the one that started me off. I was like, ooh, option selling, because I bought it at $12 and I sold it for $32. So I made $20 on that. I was like, oh, that was so easy. I made $20 in what, 2 days? Great. Way better than shares. So that kind of got the bug going. So then it's like buy it for 37, sell it for 40. Buy it for 82, sold it for 72. Not great. $10 loss, but I'm still ahead. So on and so forth, so on and so forth, so on and so forth. The other day, I bought 2 contracts for 16 cents and I sold them for 32 cents, which means I made $32. I doubled my money on that. So I was a little excited at that. I went ahead and bought 5 more shares of the stock. So now I have 20. It is a dividend stock, so the more shares that you have, the more money you get when they do offer dividends. I think the last time I got dividends, I was given $2.25 for my 15 shares, whatever. But yeah, so I'm waiting until markets open today. I think it's kind of trending sideways enough where I feel comfortable of doing options again, but I want to make sure that I set a target date a little bit further out, and I don't want to spend any more than $25 on it. Ideally, I'd like to buy 2, and then what I did basically, because I don't watch this 24/7. So what I did was I said my strategy is try to double my money, or at least if it's this price, I'd probably try to make 25% on it. So what I do is I'd buy 2 of the contracts and then I'd immediately list them for sale at a limit price of like 35 or something. And if it goes up to 35 cents while I'm working or doing something else, then great, they sell automatically and I'm in a good place because I've made money on it. And if it doesn't, then I would just hold them until it does, or until I decide like, oh, now's a good time to sell it before it drops below 25 cents again, I start losing money. But I feel like Ford from this point is going to trend back up between now and like the middle of April. So that's kind of my thought process on that. But we come to this. This is yesterday. As you can see, I started the day at 1173.43 and I ended the day at 1213. A little after hours trading's dropped it down a little bit. But there's this big jump, and I can explain. So what I've done is what's called a diagonal credit spreads. So I bought this 2 option order, which it's called that because it doesn't have in Robinhood, it doesn't automatically call it a diagonal credit spread. It doesn't have that lingo in there. But if I was to make like an iron condor or a debit spread or a credit spread or something like that, like a basic one, it would say, buy a debit spread or whatever it is. So this 2 option order, I got $12 credited to my account, which means that if I was to hold this to expiration and the price never went above my break-even point, then I would make $12 if it expired worthless, essentially. But what I did, and this is just pure luck, so this is not a best practices video. This is just what I did, and it happened to work out. Is the 2 option order is I sell a contract for 100 shares that expires. I think I did April 15th. It should say, yeah. I sell one that expires on April 15th, and I bought one at a slightly higher strike price, away from, out of the money, for the next day that I could, which was the 17th. So they're 2 different days. But I sold a call and then I bought a call. This made it so that because it was further out of the money, this was cheaper to buy, even though it was a further out date than this was to sell, which is why I got a difference of $12. All right, that's my basic order. And if you want to learn more about credit spreads and option trading and specific ways to set them up, I'm not your guy. There's many other channels out there on YouTube who can do a much better job of doing that. I wouldn't feel comfortable trying to explain that to anybody, but I'm just letting you know that this is what I did, and this is kind of where I got my ideas from. All right, so I was sitting having lunch. I'd already bought this, got $12 on it, feeling good. All right, well, I noticed that it started to make a little money, but not a whole lot. Basically, it was trending around the strike price, but the price of the stock itself was going low. So my sell, because I was selling a call, the value of that selling a call was going up because the stock price was going down. And it was confusing. Watch a video. So what I decided to do was I'm just going to sell that leg of the contract. It had made like $25 on it, and I figure between now and April, 17th or whatever, the S&P 500 will probably go back up, so I'm fine. So I cashed out that one leg of it. You can close out your whole order if you want to. Like if I'm making $10, $12 or something on it and I want to just get out of the trade, you could close it out as a whole. But I decided to close out that leg separately, so that's what I did. So I sold that leg of the contract. I think I sold it for $137 and I bought it back for $113. So I made $24. So now this one was at negative $24, $25 at the time because they offset each other because it's a buy and a sell around the same price. So what I decided to do was just put a limit sell in it, and I said if it goes above $1.32, because it was at like $1.07 or something like that. If it goes back above $1.32, which means I would have made back all the money, so it would go to zero, which means that I would at least profit to the $24. And then it goes above it a little bit more, so I would have made I think I made like $6 on this leg of it. Then I'll sell it. And I figured, it'll be like a week or something. Well, if we look at our chart over here, actually, if we look at the S&P 500 chart, you'll notice that this is yesterday, this is one day. Started off, so I bought the contract around here and it started to drop down. I think I sold the leg around 1 o'clock, 1 o'clock. It may have been right here. And then I was like, okay. And then the other one was kind of jumping around a little bit, negative 24, negative 5. And then all of a sudden I was washing my car and then I got a little notification saying, oh, your contract's sold. Wait, what? And I looked at it and sure enough, it sold it because this had jumped up in price. So when we look at that, you see around that same time, this jumps up in price. So I made over $30 or around $30. And I'm not 100% sure if the $12 that I got, I kept because I sold it or if I subtracted out of the total. But either way, I made at least $30 on it right here. So you go from 1168 to 1207. And then it kind of basically just trended sideways. It went up a little bit more just because some of these other stocks went up. And the reason why that happened, as I found out later by listening to NPR, is that apparently the feds were going to release the information related to whether they're going to hike if the Federal Reserve was going to increase the prime interest rate again. And so the stock was trending downwards because people were worried that they were going to do that. So they were hedging their bets and selling off while they were ahead, kind of thing. Price goes down. And then they go, oh no, we're not going to raise rates for the rest of 2019. And everybody goes, yay, and buys a bunch of stocks. And then the price shoots through the roof, relatively. And that's kind of what happened. So I got super lucky with that. We look at our trend. We've been trending downwards with all this stuff. Kind of go up a little bit. because I sold those options the other day, and then it goes down again, and then boom, up. So we are up 3.82% on the week. So 1170 up to 1206. Pretty good. But yesterday was definitely an interesting day, to say the least. Thank you guys so much for watching. As always, I've been WC Hamilton, and we'll see you in the next episode. Bye.